Stock market summary. August 25th to 29th weekly recap. The S&P 500 dipped modestly, down about 0.1% for the week, while the Nasdaq and Dow followed suit, with losses of roughly 0.2%. But it wasn't all downhill. Midweek strength led the S&P 500 to hit an all-time high at 6,501, before a late-week pullback took it back to around 6,460. For the month of August, the S&P 500 rose 1.9%, marking its fourth straight monthly gain. Notably, the Equal-Weight S&P 500 ETF, focused beyond megacaps, jumped 2.7%, its longest monthly win streak since 2021, signaling broader participation. Tech, especially AI-related names, led both gains and pain. Nvidia slumped into a three-day skid, along with chips and hardware names, dragging broader indices lower late in the month. Meanwhile, defensive and cyclicals held up. Energy, financials, and healthcare offered relative stability through the volatility. Technically, the S&P 500 briefly breached 6,500 before retreating. Important resistance turned support now between 6,450 to 6,500. Looking ahead, historically, August is weak to middling, and September is often the worst month of the year for stocks, averaging a 1% to 1.1% decline for the S&P 500. So, August closed positive, led by broad gains beyond just big tech. But with technical softness near record high and the overbought technical indicators, volatility may pick up going into the new month. However, the market's expectations for a rate cut around the middle of the month should be able to contain the bears, backstopping the liquidity-driven uptrend into the final quarter of the year.